Harshvardhan Dole. Okay. He's the Vice President at IIFL. In fact, Harsh, let me just begin with that only. The CGD space. Yesterday as well, we saw all of those stocks spiking in the trading session. And there have been a couple of positive news flow for Gujarat Gas specifically. The price hike that, Aramco suggested on propane is something that should be beneficial for them as the competition gets more expensive. What do you think are the tailwinds to really watch out for the city gas distribution space, and how are you viewing the entire sector right now?
Hi, Nisha. Firstly, to you as well as all your viewers, wish you a very happy new year.
Thank you. Wishing you the same.
So essentially, when I look at the CGD space, I wouldn't take a 1 or 2 quarter view, because this is a sector which has got multi-year tailwinds. And these tailwinds are in the form of stable policy, favorable initiatives from the government in terms of gas supplies, and most importantly, ability to price these products freely in the market. So that places these companies favorably, much favorably relative to the earlier past. Having said that, I think these companies should be able to consistently grow their volumes at least at 7 to 8% for next few years. 7 to 8% volume growth clubbed with at least 2-3% margin expansion. That means combined operating leverage should play out, and you should see a double-digit earnings growth for next foreseeable period in time. So in general, we like the space, and I think that as the noise on EVs etc. kind of dilutes, and these companies consistently generate solid cash flows as well as earnings growth, the P multiples will consistently hold on. So IGL continues to be our top pick in the sector, followed by NGL. And as of now, Gujarat Gas is the least preferred stock in the sector.
Sure. I was also looking at the PSU's valuation. If you take all the PSUs, all category of PSUs put together, I would say that, would it right to assume that the gas transmission, and gas transmission GAIL may have run up a bit right now, but gas CGD companies actually are the relatively undervalued part of the overall PSU basket. So under-owned also, because the earnings have not gone great shakes. Can that mean revert in the next 2-3 years? Because I'm glad you brought that up. We should not look at them quarter to quarter, but 2, 3, 4 years. Even oil ministers saying, look at the 2030 targets and see how we overachieve them.
Yeah, I mean, if you were to look at these stocks, one of the reasons why they have not done well, A, there was an uncertainty in terms of gas supplies. B, there was few states had promulgated policy in terms of electric vehicles, for which there was uncertainty in terms of their near-term growth. But as these clouds get cleared and these companies consistently report earnings growth driven by volumes and margins, I think multiples will only catch up, because rarely you get to see businesses which are non-dilutive nature and yet growing and yet generate more than 20% ROEs and ROCEs with a solid free cash flow profile. So perhaps as the investors gather confidence on their ability to grow the businesses, the re-rating will be gradual and more back-ended.
Just wanted to shift focus and talk about the oil and gas space in the sense of all these oil marketing companies, HPCL, BPCL, IOCL. In the last quarter of calendar year 23, they ran up anywhere between 40 to 70%. Now there's this raging debate whether there'll be a cut in the retail fuel prices or not. What do you see the possibility of that? And Harsh, what's your view on the sector now after the run-up?
So Anisha, frankly, if you take a view on the sector, we like the downstream companies the most, and we like them even over the city gas distribution companies, simply because the payoffs are far, far more attractive. And for example, take case of maybe IOCL, which is the most undervalued stock in the sector. It's available at one-time book. And even if you assume that fuel prices are cut eventually in FY25 and there is a normalization of margins thereof, the dividend yield is in double digits. So you're talking about the largest refiner and marketing company in India with a double-digit dividend yield sometime in FY25. So you cannot go wrong. Same is case with BPCL. I think if you strip out the embedded value, which is coming from Mozambique, Petronet LNG and IGL, BPCL's core earnings are trading at only 6 to 6.5 times. In the history of BPCL, rarely you have seen this kind of valuation multiples. In fact, the 2024 strategy note that we have published yesterday, BPCL is one of our top picks in the sector. So we find the risk reward very, very favorable for the oil marketing companies in general, and BPCL and IOC are preferred stocks. We of course like HPCL, but in terms of pecking order, it's BP, IO, and then HP.
Actually, very interesting that we're talking about the fuel price cut and the overall oil space, because right now only we're getting the commentary from the oil minister that there's no discussion on fuel price cut at the moment. He says that not asking OMCs to cut retail prices, but the situation improves. Of course, there's a discussion that happens on an ongoing basis, but for now, there's no talk on the table of any price cut. And let's pull up the intraday charts of the stocks of IOC, BPCL, HPCL. These are the stocks which are most sensitive to this kind of news flow. And you are seeing a sharp spike in the last few minutes in all of these counters, because after that huge run up at the end of the last month, we had seen a bit of a slide, a bit of a stabilization happening on the stock prices, because the reports have started surfacing again that there is a possibility that if crude sustains below $75 per barrel mark or $80 per barrel mark, there could be discussions on the table about retail price cuts happening, especially with the elections impending. Now at least that clarification coming in from the minister that there's no such talk, and I think it will go a long way in assuaging the concerns.
Yes, I mean, one part of the market always thought that a fuel price cut actually maybe as optics, government may actually take. But my point is that they are making very healthy margins right now. Marketing margins are pretty healthy, volume growth is good, and they are also upping their non-fuel infrastructure like EV, all of that. So in some years from now, I mean, look at the kind of profits they are making. BPCL made annual profit of closer to 20,000 crore. Oil Minister only cited that at one point in time we are planning to sell it for 40-50,000 crore. Now they are making profits. So they have their deep value, as Harsha says. I'm completely in agreement. But the market needs to understand it, because they are always taken as a point A to point B kind of stocks, OMCs. Fair. They are rarely taken at buy and hold for 5 years kind of stock. Maybe this time it's different, because everything else in the PSU space has run up. Asha, we'll take to just switch sides from pure oil and gas to a bit of power as well. We spoke to coal SECI today. We'll play a few slices of that. I want to come back and talk about power generation and energy stocks with you. But let's play some slices of the coal SECI conversation earlier in the day.
Coal India is doing extremely well. You must have seen the market capitalization growth in last about a year plus. It has gone up by about 40%. As regards the production volume is concerned, Coal India is consistently showing excellent growth of over 11% compared to the last year. And as far as the capex is concerned, Coal India has achieved 84% of its target by December. Primarily, Coal India is investing onto the first mile connectivity projects for eco-friendly mechanized evacuation of coal from the mines to the loading point. Massive investment is going on environmental sustainability measures, which includes closure of the mines and lot of afforestation, creation of water bodies, eco parks, OB2 sand, etc. Various projects are under implementation. Coal India also have plans to construct the spur lines as and when required. CIL has committed about 20,000 crore plus of investment onto augmentation of railway infrastructure in association with the state governments and Ministry of Railway in all three major coal producing state of Chhattisgarh, Odisha and Jharkhand.
All right. So Harsha, what we wanted to talk to you about is, out of the power generation companies, especially from thermal, which are your top picks right now?
See, the way stocks have run up, it's tough to give a call based on what will happen in the next couple of quarters' time. And therefore, when we are evaluating the sector, we are taking slightly extended view. And we are of the opinion that at least for next few years, the industry fundamentals will be in favor of the generating and the essentially distribution companies. And therefore, one must align the allocation more towards generation and distribution. And therefore, from a pecking order perspective, we like NTPC the most, followed by distribution entities like Torrent Power and CESC. And then the usual suspects will follow, which is Power Grid, etc. But NTPC still continues to be a preferred stock. Having said that, with the CERC's draft regulations around the corner, I think the stocks are awaiting a directional call from the regulator, and therefore the near-term movement of these stocks will more depend on the tone of the draft regulations. So we are hoping that given the shift in fundamentals, regulator will not take any adversely hawkish view and will try and balance out interest of the generator distribution companies in one go.
On that note, we'll let you go. Appreciate you making time and speaking with us, and best wishes for the new year from 18 Hour family as well.